In a market defined by volatility and shifting investor sentiment, Bitcoin continues to demonstrate remarkable resilience, maintaining its position near the $78,000 level, while Ethereum shows signs of renewed momentum, climbing steadily and capturing attention across trading floors. This divergence raises a critical question for every serious participant in the cryptocurrency space. Is this the early signal that Altseason, the long-awaited period of broader market rotation into alternative coins, is finally beginning to take shape? Welcome to another in-depth update from Crypto Hub, your trusted source for professional analysis of the evolving digital asset landscape. Today, we delve deeply into the current market dynamics, examining Bitcoin's steadfast performance, Ethereum's surge, the technical and fundamental factors at play, historical parallels, potential catalysts, risks, and what this all means for investors navigating these uncertain yet opportunity-rich waters. As we step into May 2026, the cryptocurrency market presents a complex picture, characterized by cautious optimism amid lingering macroeconomic pressures. Bitcoin, often referred to as digital gold, has held firm around the $77,000 to $78,500 range following a period of consolidation after its earlier peaks. This stability comes despite broader market corrections seen in late 2025, where Bitcoin retreated from highs near $126,000. Its ability to defend key support levels demonstrates strong underlying demand, particularly from institutional players through spot ETFs and long-term holders who continue to accumulate rather than distribute. This holding pattern is not merely sideways movement. It reflects a maturation in Bitcoin's role as a store of value, less prone to wild swings compared to its younger counterparts, yet still influential enough to dictate the overall market direction. Ethereum, on the other hand, has exhibited a more dynamic surge, trading recently in the vicinity of $2,200 to $2,250. While these figures remain well below its all-time highs, the relative strength against Bitcoin is noteworthy. Ethereum has shown outperformance in recent sessions, with the ETH-BTC ratio climbing to levels not seen consistently in early 2026. This movement suggests early capital rotation, where investors, having secured positions in Bitcoin, begin seeking higher beta opportunities in the smart contract leader. Ethereum's network fundamentals remain robust, with ongoing developments in Layer 2 scaling solutions, increased activity in decentralized finance, and growing adoption of tokenized real-world assets. These elements provide a solid backbone that differentiates its current surge from mere speculative hype. To understand whether this setup heralds the start of Altseason, it is essential to examine Bitcoin dominance, a key metric that measures Bitcoin's share of the total crypto market capitalization. Currently hovering around 60%, dominance has climbed in recent months, reflecting a Bitcoin season where capital prefers the safety and liquidity of the market leader. However, subtle declines or failures to push higher could signal the beginning of a shift. Historically, alt seasons often emerge after Bitcoin establishes a macro top or consolidates at elevated levels, allowing profits to flow into alts. In previous cycles, such as 2017 and 2021, dominance drops preceded explosive rallies in Ethereum and smaller tokens. Yet, the 2026 market is more institutionalized, with tighter capital concentration in top assets, meaning any alt season may be more selective rather than a broad spray across thousands of projects. Let us break this down further with technical analysis. Bitcoin's price action shows it respecting a rising channel from recent lows around $62,000 earlier in the year. The 200-day moving average sits as a significant resistance overhead, but repeated tests of support zones indicate buyer conviction. On-chain metrics reveal that long-term holders are not capitulating, with exchange reserves remaining relatively stable or declining as coins move to cold storage. ETF inflows, though fluctuating, have provided a consistent bid, underscoring institutional confidence. For Ethereum, the completion of certain liquidity sweeps and its historically strong seasonal performance in May add weight to the bullish case. Negative funding rates in derivatives markets suggest potential for squeezes to the upside if momentum builds. Traders are watching the ETH-BTC pair closely. A decisive break above key resistance could accelerate rotation. Beyond charts, fundamental drivers are at play. Ethereum's ecosystem continues to evolve with upgrades enhancing scalability and security. The network processes the majority of decentralized application activity, stablecoin transactions, and emerging use cases like real-world asset tokenization. As traditional finance explores blockchain integration, Ethereum's first-mover advantage positions it well. Meanwhile, Bitcoin benefits from its narrative as a hedge against fiat uncertainty, especially with global liquidity dynamics and potential shifts in monetary policy. However, elevated U.S. inflation data and macroeconomic headwinds have introduced volatility, pressuring risk assets across the board. In this environment, Bitcoin's strength acts as an anchor, while Ethereum's surge hints at growing risk appetite. Delving deeper into market history provides valuable context. In past bull cycles, Bitcoin's dominance would peak and then decline as money rotated first into Ethereum, then large-cap alts like Solana or Ripple, and eventually into mid and small caps. The Altcoin Season Index, which tracks the percentage of top altcoins outperforming Bitcoin, currently sits in the low 30s, firmly in Bitcoin territory. For a confirmed Altseason, this index typically needs to surpass 75. We are not there yet, but early signs, such as Ethereum's recent beats and whispers of capital waiting on the sidelines in stablecoins, suggest preparation. The total crypto market cap hovers around $2.6 trillion, with room for expansion if Bitcoin breaks decisively higher toward $80,000 or beyond, potentially unlocking further flows. Investors must consider the role of external factors. Regulatory developments, including clearer frameworks in major jurisdictions, could boost confidence. Institutional products like ETFs have transformed access, bringing in billions, but also introducing more measured flows compared to retail-driven manias of the past. ETF outflows from Bitcoin in some weeks have coincided with Ethereum's relative gains, pointing to tactical shifts. On-chain data for Ethereum shows accumulation by smart money addresses, while developer activity remains high. For altcoins broadly, sectors like AI-integrated projects, DePIN, decentralized physical infrastructure networks, and RWAs, real-world assets, are poised for attention if rotation materializes. However, many smaller tokens remain deeply underwater from cycle highs, highlighting the need for selectivity. Risk management cannot be overstated in this analysis. While Bitcoin holds strong, a failure to maintain $75,000 support could trigger broader selling. Ethereum's surge, though promising, faces resistance levels that have capped previous attempts. Macro events, such as Federal Reserve decisions on interest rates or geopolitical tensions, could override crypto-specific positives. Leverage in derivatives markets remains a double-edged sword, with liquidations capable of amplifying moves in either direction. Serious investors should focus on dollar-cost averaging, position sizing, and diversifying across established assets, rather than chasing unproven narratives. The market's evolution toward greater efficiency means outdated strategies from 2021 may no longer apply. Data-driven decisions and fundamental analysis take precedence. Expanding on Ethereum's potential, its upgrades have addressed previous bottlenecks, enabling higher throughput and lower fees via Layer 2 solutions. This has sustained DeFi TVL, total value locked, and NFT activity even in subdued periods. Staking yields provide additional utility, attracting long-term capital. Analysts project ambitious targets for Ethereum in 2026, with some forecasting $5,000 or higher under favorable conditions driven by ETF inflows and ecosystem growth. Bitcoin, meanwhile, eyes new highs potentially toward $100,000 plus if cycle patterns hold, though predictions vary widely due to current consolidation. The interplay between these two giants often sets the tone. When they move in tandem, or with ETH leading, it bodes well for the broader market. Considering altcoins specifically, a true alt season would likely unfold in phases. First, Ethereum solidifies gains and breaks key ratios against Bitcoin. Then, blue-chip alts like Solana, with its high-speed network and thriving meme and DeFi ecosystems, could follow. Solana has shown resilience in past rotations despite competition. XRP might benefit from regulatory clarity and cross-border payment use cases. Emerging narratives in artificial intelligence tokens or decentralized infrastructure could capture imagination and capital. Yet, with market concentration higher today, fewer projects commanding most of the altcoin market cap, gains may be uneven. Investors ignoring fundamentals in favor of hype risk significant drawdowns, as seen in previous cycles where many tokens never recovered. From a global perspective, adoption trends support long-term positivity. Countries exploring Bitcoin reserves, corporations adding crypto to balance sheets, and technological integrations signal mainstreaming. In regions like Asia and the Middle East, regulatory advancements facilitate growth. Stablecoin volumes continue expanding, acting as a bridge between traditional and crypto finance, often on Ethereum or compatible chains. This infrastructure build-out lays groundwork for the next expansion phase. However, challenges persist. Energy consumption debates for proof of work, scalability concerns, and competition from newer blockchains require ongoing innovation. Bitcoin's proof of work security remains unmatched, reinforcing its dominance, while Ethereum's shift to proof of stake aligns with sustainability goals. Technical indicators warrant close monitoring. For Bitcoin, RSI levels, MACD crossovers, and volume profiles suggest building momentum if it clears near-term hurdles. Ethereum, similarly, shows bullish seasonal tendencies for May, with potential for volatility spikes around economic data releases. Broader market sentiment, measured by fear and greed indices, hovers in cautious territory, often a precursor to reversals when extremes are reached. On-chain analytics from platforms tracking whale movements and network health provide additional conviction. Combining these with sentiment from professional traders paints a picture of consolidation before breakout, with Ethereum's surge as a leading indicator. As we assess the probability of Altseason commencing, several scenarios emerge. In a bullish case, Bitcoin stabilizes or pushes to $85,000. Dominance dips below 58%, and capital floods into alts, driving 2x to 5x gains in quality projects over months. A base case involves prolonged Bitcoin strength with selective alt outperformance, particularly in Ethereum and Layer 1 competitors. Bearish risks include macro deterioration, leading to further dominance rise and altcoin stagnation. Given current data, the environment leans toward gradual rotation rather than immediate explosion, rewarding patient, informed participants. CryptoHub emphasizes education and due diligence over FOMO-driven decisions. Examining specific altcoin opportunities, projects with real utility, strong teams, active communities, and product-market fit stand the best chance. Decentralized finance protocols on Ethereum benefit from its liquidity moat. Solana's ecosystem thrives on speed for consumer apps. Emerging sectors like decentralized AI or physical infrastructure offer asymmetric upside but higher risk. Tokenomics matter. Inflationary supplies versus deflationary mechanisms like burns can influence long-term value. Always review audits, roadmaps, and adoption metrics rather than price action alone. In a potential alt season, liquidity flows from Bitcoin profits will favor those with established narratives and execution. Portfolio construction in this climate should balance defense and offense. Core holdings in Bitcoin provide stability, Ethereum adds growth potential through its platform status, and selective alts offer alpha. Regular rebalancing, tax considerations, and security best practices like hardware wallets are non-negotiable. The 2026 market differs from predecessors due to institutional maturity. Expect slower but more sustainable moves. Predictions for Bitcoin reaching $150,000 or Ethereum $5,000 by year-end reflect optimism grounded in cycle theory and adoption curves, yet execution depends on external variables. In conclusion, Bitcoin's strength amid Ethereum's surge presents a compelling setup that could mark the prelude to broader altcoin participation. While Altseason is not confirmed, the ingredients, capital rotation signals, network fundamentals, and historical seasonality are aligning. CryptoHub will continue monitoring these developments closely, providing timely, data-backed insights. Whether you are a seasoned investor or building your position, prioritize risk management and long-term conviction. The cryptocurrency market rewards those who study, adapt, and act decisively yet prudently. Stay informed, stay vigilant, and join us next time for more professional updates on the dynamic world of digital assets. This has been your comprehensive market briefing from CryptoHub. Thank you for watching, and until next time, trade responsibly and invest wisely.